Get to it, and a reader of the themes set to drive markets this week. To do that, we're joined by Pete McGuire from XM. Pete, a very good Monday morning to you. So quite a bit to watch out for this week. Why don't we start locally, because we do have that key CPI figure to be released Wednesday. Expectations that's going to come in around 0.7%. How are you looking at it?
Yeah, exactly right. Good morning, Andrew, and good morning to everyone. Yes, around that 0.7. And what I think the great issue is how it creeps forward, really. And, we're shooting above that 3% in Q2. So I've just made some notes there. The great concern is moving forward. What it is at the moment is, I think, taking everyone by a little bit of surprise. We've got negative interest rates or zero interest rates across most of the world. And you've got inflation really starting to ratchet up. Certainly in Eurozone, US is 5.5%. So, yeah, where are we going to be by Christmas? That's the great concern. And what happens to our dollar and what happens to, the cost of goods? Everyone has to put their hand up. I think Andrew will need a pay rise.
Yeah, well, that'd be nice. But, of course, Pete, the great unknown being the COVID situation that's developing in Australia at the moment, particularly in New South Wales. So that does cloud the picture, doesn't it? Particularly as far as forecasting is concerned, but also as far as policy settings as well.
Absolutely, Andrew. That's the unknown, and they're the issues that any economist or anyone that trades on the markets needs to be mindful of, because they're uncharted territory. What's relevant today possibly may not be relevant next week or next month, and that's why it's very much you've got to pick your right sector if you're looking at equities, or you've got to be very conscious as far as commodities or what impact it has as far as supply lines and currency. So. Yeah, it's you've got to be fairly worldly in your approach and certainly take on board a fair bit of information to appreciate all of those moving parts.
Yeah, you mentioned commodities and also currency as it relates to that. How are you looking at the Aussie at the moment? It remains under pressure. Do you see it staying in that position?
Well, it's 73.67. I've got to read there at the moment, Andrew, so that US dollar index is punching towards that magic 93 number. That's something that I think all traders need to be mindful of. The first number that I look at each day is the US dollar index to take an appreciation. So as that seems to continue to uptick, puts pressure naturally on our Aussie dollar. And we've really come under a hell of a lot of selling pressure, really probably since April, May, as demonstrated in that chart there, and what we experienced going back to, February, March. So a big sell-off, and in turn, I think there's possibly even a little bit further softness. We're going to wait for that CPI number to appreciate what the mood is and what our talks are as far as taper, easing, or do we keep on doing what we're doing due to what you mentioned, lockdowns? Okay,
Pete, let's cast our eyes further afield, the global picture in the States. Now, interesting, this time last week, essentially investors were losing their nerve, weren't they? Given the concerns over COVID, the rise of the Delta variant, we saw that sharp pullback at the beginning of the week. But then they shook that off and it was upward from that point. So how are they likely to treat this week, do you think?
Well, it was a big move up, Andrew. We had S&P up 1%. You've got the Nasdaq up 1.04 and you've got the Dow up 0.69. So what we experienced on Friday or Saturday morning here was a strong uptick. That possible, I think that's quite probable that'll wash across Asia today, that good mood story. So I'd say we're up 0.3 as you mentioned, so probably we might end the day up 0.5% or even a bit higher. So I think there's a little bit of momentum there in the sense of buying. Keep an eye on as far as the CPI numbers coming out and durable good orders from the US this week. Eurozone inflation numbers also, Andrew, are a concern. And what the Fed's mantra is as far as taper and what they're prepared to do in this, over the next month or two. But they're also got issues, as you know, with Delta variant starting to ratchet up considerably in numbers, and what the Fed will have to do and what they want to do might be two different things.
Okay, well, yeah, speaking of that then, obviously, so the Fed is meeting, perhaps an indication they're going to articulate a little more what they're likely to do with potential tapering there as they lead into that, what is seen as a critical meeting at Jackson Hole in August.
Yeah, absolutely. That's only a couple of weeks away. So they've got, again, it must be incredibly hard to, you go there with a script and you say, well, this is what we're going to deliver. But unfortunately, you've got inflation running at 5.5% in the States. they could have inflation this month. I think there's a read coming out, 0.07% month-on-month increase, Andrew. So that's an enormous uptick. So the Jackson Hole meeting, whilst they've got inflation booming, they're also worrying about taper. They're also worrying about what they're doing with the domestic interest rates and the global economy, and and everything else combined. So it's not going to be an easy process to work through, and to try and get some sort of clarity from a trading perspective. What's what's the mood and where are you centered?
Hey, Pete, of course, all eyes on Japan at the moment, given the Olympics in Tokyo.
Yeah.
Interesting to see. Is there any benefit going to be delivered to the country? What are you looking at the moment?
Well, Andrew, they should have had the tune of millions of visitors going across that whole the whole nation, and unfortunately they've got zero. So that's going to have an economic impact definitely to their 21 and 22 forecasts. Where does that play? I don't see any talk as far as Japan worrying about easing that negative interest rate story. The Nikkei is performing reasonably well. It's had a nice move over the last, as most big equity markets have over the last 9 months. So I think that move will continue. Watch the yen. We're currently got a number there around that 110.56. So I think there's going to be a little bit further softening as far as yen to US dollar. Great on a cross rate. Possibly have a look at it against the pound or even against the Kiwi. So yeah, Andrew, a great country to visit. Fantastic culture, and unfortunately we can't go and see the games.
Yeah, it'll be nice. Who knows when we'll be able to actually leave the country to do that.
Yeah.
Pete, thanks for joining us from XM. Comprehensive as always.
Thank you, Andrew. Take care.